This is Finextra at Cybos, and this afternoon I'm at the Barclays stand with Maurice Cleaves. Maurice, can you tell us a little bit about growth in Africa? Is it coming mainly from global corporations who are doing more business in Africa, or is it more from African corporations who are wanting to do more business themselves globally?
I think it's a mix of the two. Primarily what we're seeing is the corporations that we deal with across Europe and across the UK and also in the US are finding new markets, and as they find new markets then we need to follow them and provide them with banking services. In Africa we have a unique proposition in that we've been in Africa for over 100 years. In certain of the markets, from a retail franchise point of view, we are number one, number two, number three in that market, and therefore given our experience with those corporates in a European or a global environment, then we can also help them as they go into a new entry into that market.
What are the unique challenges for corporate treasurers who are operating in Africa?
Very much it's new market for them. They are looking to do banking. Quite often their experience isn't in banking. They need to collect funds, they need to keep funds safe, and they need to be able to transfer funds. They need to understand new regulation, new environment, and we can help them with that. Quite often they're setting up new Treasury centres, and they may set up a Treasury centre in an environment that we already have as one of the markets that we serve. And so we can help them to do that. So very often existing relationships, going to new markets and taking our experience with them.
Can we touch a little bit on mobile? There's obviously lots of mobile success stories in a country like Kenya for mobile payments. What's happening in Africa more broadly for the unbanked and banked markets?
I think Africa is a unique case in that the way that the mobile business has grown up in Africa is very much for the unbanked. So risk of theft, risk of fraud was very prevalent in many African countries because cash was the main means of value exchange. So actually what mobile has done is it's stepped into a space where you've got many consumers who have got mobile telephones, but they don't have bank accounts. And so as a method of transfer, then that's become the most appropriate use. I think if you take a parallel to what's going on in more mature markets, or certainly more banked markets, i.e. the UK, then we launched a Ping It proposition, which is a mobile payment scheme, but actually it's actually to be able to serve a market which is already banked and a more efficient means of transfer, but for the same reason, to eliminate cash.